Good morning, everyone, and thank you for having me. So, Jules did ask me to be both short and punchy. So, I'm an investment strategist, and I have never seen a clearer gap between reality and perception, which is a spectacular opportunity, consequently, for investors to make or lose money. And I'm confident in saying that this energy transition will have a dramatic impact, for better or for worse, on the wealth of every single person in this room within the next 5 years. So I will give an unashamedly investment perspective, which really can be summarized as follows. There is a shift going on. The investors make or lose money at tipping points or during shifts. And they make or lose money right at the start of the process. So if I start with what this forum very well appreciates, the world is shifting from fossil fuels to renewables. Initially, it was indeed the desire to reduce carbon emissions, which drove policy, efficiency, innovation. Next, of course, the spectacular fall in the cost of key renewable technologies has become the new driver. You then get further imperatives kicking in, such as local pollution and energy security. And then finally, of course, we have the famous emerging market energy leapfrog, which a number of people have alluded to, which will complete the shift from one state to another. This is, of course, assisted by a positive feedback loop. So, as the cost of renewables falls below that of fossil fuels, so policymakers can stop subsidizing renewables and start to tax the pollution externality of fossil fuels. And that in turn speeds up the process of change. What this means, therefore, is that demand for fossil fuels is actually about to peak. This is not at all widely appreciated or understood, but I can assure you demand for fossil fuels is about to peak. Let me give you a couple of statistics to back this one up. Already in 2016, 2/3 of the growth in electricity supply came from non-fossil sources. At current growth rates for solar and wind, all new electricity supply will come from non-fossil sources by 2020, 2021. So, because electricity is 80% of the increase of incremental demand, fossil fuels demand will peak shortly after that. Now, people often say this cannot be. Solar and wind are tiny. Actually, we've seen this many times in history. Incumbent demand always peaks when challenges are relatively small. I call it the 5% rule. Okay, I now want to focus a little bit on financial markets. Financial markets are not driven by size. They're driven by change. And as demand peaks and falls, you get a series of very well appreciated and very obvious consequences. So you get stranded assets. The best example of this, of course, is the European electricity sector. $200 billion of write-downs in the last 8 years. The lights are still on, a lot of the facilities are still there, but we've seen massive write-downs. You then get bankruptcies. Witness the spectacular series of bankruptcies across the coal sector, across the world, when global coal demand is just 2% of its all-time peaks. And then you get new competition. Again, look at any of the energy sectors now. There's huge amounts of new competitors coming in. The best example perhaps being the car industry, and of course, a particularly resonant and significant issue for Germany. What all this leads up to for financial investors is market underperformance, or to put it another way, you lose money. So we made this little schematic just showing how we're getting one peak after another as this transition progresses. It creates more and more victims. Gazprom was perhaps the first victim, once had an aspiration to be a $1 trillion company. Other victims would include GE, Volkswagen, Peabody. It's all part of a continuum, a continuous change of creative destruction. The next vulnerable areas will be oil and gas, energy transportation. So I think it's fair to say that this energy transition and the financial impact of it should not come as a surprise. We have been warned. So in my last 2 slides, to stick to the timetable, Jules, I would like to talk about the magnitude of the change. So up to 1/4 of all equity and debt markets globally are in fossil fuel and fossil fuel related indices, fossil fuel related stocks. The built value of the current fossil fuel infrastructure is $25,000 billion. A large share of this will have to be written off by 2050. All of it will be worthless by the end of this century. And it's completely delusional to imagine that decline rates and depreciation alone will solve the problem. Investors need to prepare for very significant losses. And let me conclude on a positive note, because of course there is another side to this transition. The world is ready to be reshaped. As this conference has shown, there are innovators creating new business models, new ideas, new growth in solar and wind, electric vehicles, batteries, blockchain, so on and so forth. So we are actually at the start of a dramatic period of very significant growth. Bliss is it in this dawn to be alive, as someone said yesterday. So I asked the investors in this room, where do you want to be? Do you want to be losing money by sticking with a doomed industry, hoping for the best? Or do you want to be building new fortunes and shaping the energy future? Thank you.